Today, I want to introduce you to why fundamental analysis is a style of finding investments that you should know about. My name is Jonathan Stav, and here at Sectors Made Simple, we've created over 200 hours of educational content and unique investment tools to give you the knowledge and resources you need to invest simpler. As I mentioned before, fundamental analysis is a valuable tool for investors to have in their tool belt, and today I want to give you a broad, comprehensive look at exactly what fundamental analysis is. Now, fundamental analysis is a very large topic and is not one that we can cover in full detail in just the time that we have for today's video. So, in addition to providing you the basics and an overall picture of what fundamental analysis is, I'll be able to give you some hints as to where you can go to learn more about fundamental analysis yourself, and how we're supporting your efforts to learn about fundamental analysis here at Sectors Made Simple. With all of that said, let's take a look at what we'll cover in today's video. In today's video, we'll cover what fundamental analysis is, why fundamental analysis is so important for investors to know about, the different layers of fundamental analysis, how you can find information on fundamental analysis yourself, or if you want more of a guided tour, I'm going to talk a little bit about an upcoming live class series that we'll be doing, teaching you different strategies that take advantage of both fundamental and technical analysis. Let's start off by answering the simplest question. What is fundamental analysis? To answer that, let's break this idea down into the two different words, starting with analysis. In terms of investing, analysis is a way of using information to determine the value of a security. No, I don't mean price, I mean value. In fact, one of the main reasons why we do analysis is so that we can compare the value of a security against the price of that security. Now, we get into fundamentals. Fundamentals is a broad category that looks at a variety of different conditions, from how well a company is doing, all the way up to how well the economy is doing, taking in all of these different factors beyond just the stock's price to determine the value that that security has. Like many types of analysis, fundamental analysis uses both qualitative and quantitative data to try and get its point across. If you need a refresher, quantitative data is where we use numbers to try and explain something, whereas qualitative data uses words to try and explain something. But why should we do analysis at all? Well, the main reason is that analysis helps us to get information that we wouldn't be able to figure out otherwise, like the value of a security. Now, we can use this information in one of two ways. We can use this information to try and pick what securities we should consider, or we can use this information to try and decide when we want to buy a specific security. Unlike technical analysis, which specializes in the second part of that, fundamental analysis really tries to drill down at figuring out what makes a good company good and which companies we should consider for our investments. But exactly how does fundamental analysis do that? And why is it specifically fundamental analysis that we feel is so important? We have to remember that in addition to normal supply and demand, a large portion of a stock's price is simply the value that that company has. And unlike price that changes rapidly throughout every single trading day, and even after hours, fundamentals and the value that that company has is much more slow moving. This is going to include many things, from small to big, starting with how profitable that company is, how quickly they're earning, any future products or competitors that they have, all the way up to how well that sector or industry is performing, and even all the way up to how strong the current economy is. All of these factors are considered in fundamental analysis and go into any fundamental analysis strategy. But the real question of fundamental analysis is how much importance should we put on any one piece of information? And that's where this story gets really deep and people dedicate their careers. But we're going to keep things nice and simple today and give two examples. One that offers a fundamental analysis metric that's pretty easy to see the value of, whereas another one is a little bit more cloudy. Starting off simple, we have price to earnings ratio, or P&E ratio. P&E compares the price per share of a security against their earnings, or we can call it profit per share. This gives us an idea of how expensive or cheap that security is based on how much earnings that company has. A stock that has a very, very high P&E ratio is considered to be more expensive than one that has a lower P&E ratio. With this information, we can compare a company's P&E against its competitors, against sector or industry averages, and more. This now gives us a way of finding which companies might be the diamond in the rough, a discounted offering for the earnings that the company brings in, or which companies are charging a premium for that extra level of quality that the company might offer. Which choice is the best for you is for you to decide. Let's now cover a fundamental analysis metric that's a little bit more open-ended. Institutional ownership. Institutional ownership is a percentage that shows us what percent of a company's shares are owned by major banks and other financial institutions. Some investors view high institutional ownership as a positive sign that the company is strong because there are many institutions that own shares in that company. However, other investors may see that high institutional ownership as a red flag because the company is more likely to be manipulated by major sell-offs and trades by these institutions. Again, there is no right or wrong answer here, which shows why fundamental analysis can be something that is very cut and dry, like P&E, but can also be very open-ended and open to interpretation, like institutional ownership. Before we get into the layers of fundamental analysis, I want to quickly remind you that if you're enjoying this video, we really would appreciate a like on this video or a subscription to our YouTube channel. These little investments by you go a long way to continuing your financial education and helping us to understand what content you've been enjoying and would like to see more of in the future. Now, let's take a look and peel back the layers of fundamental analysis. I want us to think about the layers of fundamental analysis like the ocean. The ocean is big and deep, and it goes well beyond what any of us can see. But just because it can be deep and intimidating doesn't mean that it's not something that we should consider. We can still go to the beach, play in the waves, go for a boat ride, or go scuba diving. We can explore these top layers of the ocean because there is still so much there for us to explore and enjoy. Just because fundamental analysis is so expansive and can be overwhelming, there are still many ways that investors like you and me can take advantage of fundamental analysis and use it in simple yet powerful ways. Let's go take a look at those various layers now. There are 4 major layers of fundamental analysis. There is macroeconomic analysis, sector analysis, industry analysis, and finally company analysis. This list is in order, but which side of that list you start on is up to you. You can do the top-down approach, which starts and focuses on the macroeconomic analysis and works its way down to the company analysis. Or you can start bottom-up, focusing mostly on the company analysis and working your way up to the macroeconomic analysis. For many investors, and if you're starting off with fundamental analysis, bottom-up is going to be probably the best approach, because it lets us focus on where we have a lot of relevant and available information. Company fundamentals. But there is no right answer, so I'm interested to hear from you. In the comments or in the live chat of this video, if you're watching it live, please let me know, what do you find more useful? Top-down analysis or bottom-up analysis? Let's now go layer by layer and take a closer look at what information and why that layer exists. Again, we'll be using the bottom-up ordering here, starting with company analysis. When it comes to company analysis, we have a wide range of both qualitative and quantitative data to use. On the quantitative side of things, we have pieces of information such as their profitability, their cash flow, their earnings growth, institutional ownership, debts, and more. On the qualitative side of things, we have other pieces of information, such as major competitors, investments into new technology, good or bad press, and more. We get a lot of this information from a company's quarterly and annual filings, as well as some of this information comes from independent financial analysts as well. The next layer is industry analysis. Industry analysis looks at a company and their close competitors that operate in the same industry as them. Some examples of industries include regional banking, silver, grocery stores, solar, and more. Industry analysis will also look at other pieces of information, such as supply and demand, overall costs for both labor and materials that the industry has, and the overall health of that industry. Much of this information comes from looking at all of the composite companies and averaging out values, as well as looking at the average supply and demand that that industry has. Third, we have sector analysis. Thankfully, there's not much for us to cover here, because sector analysis does most of what the industry analysis does, but on a more broad scale. So, instead of looking at solar, we might look instead at technology. Instead of looking at regional banking, we may look at financials. Once again, most of this information comes from independent analysts, as well as looking at the overall performance and value of the composite companies. Finally, we have macroeconomic analysis. Here, we look at the overall health of both the national and global economy, analyzing factors such as supply and demand, supply chain issues, global conflict, climate, and seasonality. All of this information comes from a variety of sources, such as the Bureau of Labor Statistics, the Federal Open Market Committee, and other government institutions, as well as independent analysts. Now, after we took a deep dive into the various layers of fundamental analysis, let's surface really quickly and talk about how we, as investors, can take advantage of fundamental analysis for our own investment strategies. On the company level, we can follow and study the earnings of companies that we're interested in and pay closer attention to earnings season, which is a period of 2 to 3 weeks every quarter in which the majority of companies issue their updated earnings numbers. On the industry and sector level, we're left to our own devices a little bit more, and we have to rely on independent analyst reports to provide us with information on these broader categories. One of my favorite locations to find information on industry and sector data is FactSet. They release a number of very interesting and insightful reports surrounding earnings every season, breaking down how earnings compare across various industries and sectors. Finally, on the macroeconomic scale, we can use an economic calendar found on many major investment sites to track updated metrics from major institutions such as the BLS, FOMC, and more. If fundamental analysis seems interesting to you, but you're not sure where to start, we're here to help. Starting in May, we'll be launching a guided tour into both fundamental and technical analysis. In this 5-week, 10-hour series, we'll offer live instruction to teach you various ways of using both fundamental and technical analysis to create, build, and optimize trading strategies. These classes will be held live on Zoom and will offer you the opportunity to ask questions, have those questions answered, as well as see and test real trading strategies using historical data to see how well they would have performed over time. If you're interested to join this class or you want more information, please check out the link either in the top right of this video or down in the description below. Let's now summarize all of the information that we covered in today's video. Fundamental analysis is a broad category of information that we can use to determine a stock's value. This information is made up of both qualitative and quantitative data. We can look at fundamental analysis in 4 layers: company, industry, sector, and macroeconomic analysis. These layers can be explored top-down, starting and focusing on macroeconomic and working our way down to the company, or bottom-up, focusing on the company and working our way down to the macroeconomic. Fundamental analysis data can be found from a number of sources, depending on which layer we want to explore. Thank you so much for joining for this introduction into the amazing world of fundamental analysis. It is a deep and wild world of information, but hopefully today has given you a better idea of what information we have available to us and why fundamental analysis is important for investors to consider. Again, if you're interested to learn more about fundamental analysis, you can check out all of the different data sources that we provided earlier, or check out the link for our fundamental analysis bootcamp in the description down below. But thank you all so much for joining us today, and we hope to see you all back very, very soon. Take care, everyone.